Here's a market update for June 2023. Reminder, it's not financial advice and do your own research. Questions for this video. Is now a good time to invest as of June 2023? How do I hedge my portfolio if I'm wrong? Will we get a recession and cheaper prices in 2023? And what are some big potential gainers over the next 12 to 24 months? We're going to cover inflation, Fed interest rates, the S&P 500, the DXY, US dollar strength, US jobs, US housing, recession probabilities and impacts. We'll go over a bull and bear case for the second half of 2023. We'll look at some stocks, bonds, the TLT fund, gold, and Bitcoin crypto. The April 2023 inflation numbers came in. This is headline inflation in the US. We hit a 4.9% for April 2023. You can see from the chart here, this is a 10-month low. June 2022, we hit 9.1%, and we've fallen every single month since then. So very good in the sense that it takes pressure off the Federal Reserve to keep raising rates. And the quantitative tightening can at least pause. The federal interest rate has hit 5% to 5.25% as of May 2023. The question is, will they pause here, or is there another maybe 0.25 rate going higher? Has the Fed stopped hiking? Everyone wants to know that. There's a good argument that they will pause in June and not raise rates higher. In any case, even if they did in June, 5.25 is likely the top, given the lower inflation, at least for the time being. DXY shows US dollar strength versus a basket of other currencies. You can see here we were at a DXY level of 114 in September 2022. We've fallen. We fell into that purple box at around 100 for a while. We've had some reversion to the mean, some strength to 104, but I think this is going to stay low for the near-term future. Of course, a weaker US dollar is a support for asset prices and emerging market economies, that it costs less for them to repay debts. So generally, a weaker US dollar is bullish. A weaker US dollar also supports the gold price. And this chart is US unemployment. You can see we're at a very, very historical low of 3.4% as of April 2023. You can see that spike during COVID went up to about 14%. This goes all the way back to 1948. You've got June of 1953, we're at 2.5%, May 1969, April 2000, February 2020, and then we're back now to 3.4%. So job growth has held up. We have not hit a recession, and this has surprised the market. And so it's a big reason why we're not in a recession is people still have their jobs, can still pay their mortgages, and can keep spending. Another surprise is that house prices in the US have held up. You can see this is from Redfin website. You can see at the far right there where it says 2023 that we've actually had a rising median sale price for houses in the last few months. We're at 408,000. So we've not had a crash in house prices. We have had a very large reduction in the volume of sales, but because supply is so tight, prices have not fallen. This is, of course, also a big impact on the economy, that we haven't had the price crash where people flee out of their houses or are underwater. That coupled with the job creation means people are not feeling the fear and being unable to pay or unwilling to pay for their mortgages. U.S. corporate earnings have been better than expected in Q1. Out of the 420 companies that reported first quarter results, 7.2% had net income higher than expected. Top line sales were better than expected as well, arriving 2.5% higher. The S&P 500 for the last 7 years, this is the chart. The blue line along the bottom is the 200-week moving average. You can see we've not fallen below that except for the COVID crash in 2020, and we quickly recovered. In 2019, we touched the blue line. 2016, we touched the blue line. In October of 2022, we went slightly under the blue line, but basically hit it and bounced off it, and we've been above that since then. So the low was October 2022 at 3,500. We're currently at 41.15 as of May 24th. Something to watch. It's been 7 months since the low, and despite what the bears argued, we've not even come close to retesting that. Whether we do later in the year later in 2023 is an open question, but as it stands, it's holding strong. An update here as I'm making the video. It's Friday, May 26th, and the S&P has now hit 4,200 as the debt ceiling resolution seems more likely. This is a 9-month high. So the bull case for the second half of 2023, here's a checklist. Inflation has dropped from 9.1% to 4.9%. It's been 9 consecutive months, or rather 10, of falling inflation. The Fed has likely stopped hiking, or perhaps only a 0.25 raise left. Corporate earnings are strong. Q1 earnings were surprisingly good. The job market is strong. That's also surprised the bear argument. Consumer spending has stayed relatively strong. Housing prices have held. The technical analysis supports a bull case. It's been 6 months since the bottom. We still haven't had a recession. Even if we do have a recession, the bulls would argue that the Fed would start money printing again and cut rates. The bears have been wrong since the end of 2022. Holding a large position of cash has been costly since January of this year. The S&P is up 8.55% since January, and Bitcoin is up a whopping 70% since January. So the bears have been wrong as of May. So looking at the S&P 500 moving forward through the end of 2023 and into 2024 and 2025, just a recap, we had hit 4,800 in January of 2022. We then fell 28% in 10 months, quite a steep fall. We hit 3,500 in October of 2022. That was a 28% drop. Since then, we've had a climb of the wall of worry, as they say. You can see the circles showing higher highs and higher lows up until today. The bears are saying that we'll have a recession, investors will get scared, and the S&P will sell down into that purple square of around 3,000 to 3,500. My sense is that any dips from here on will be bought quickly by bears that are now offside and doubted this rally, and that we will therefore not go into those lower lows, the 3,000 to 3,500, and rather will follow the green arrows higher into 24 and 25. Even if we did fall into that purple square, I think you would have the Fed step in to support asset prices, and we would bounce back up. It may take another 6 to 12 months to get up to an S&P at 4,800, but nonetheless, we'll get there. For the bear case argument for the second half of 2023, I'm going off some points from Gareth Soloway, who's a very smart trader and investor. His argument is that inflation will stay persistent above 3%, that a U.S. recession is still coming, unemployment will rise, and stocks will sell off perhaps 20 to 30%, either test the lows on the S&P at 3,500 or go down to 3,000. If this happens, crypto will sell off even more. He's still saying Bitcoin to 10,000 is possible. He's definitely an outlier in terms of arguing that at this point. But his main thesis is that this time the Fed will not start printing to save the market. So as we get a recession, the Fed will say we're not cutting rates, and this will make the crash worse and perhaps a slower recovery. Of course, if you're not sure about the future, and you shouldn't be, here are some defensive hedges in case you're wrong, you're a bull and you're wrong. A U.S. recession might cause a retest of the 2022 lows or go even lower. In that case, some options might be gold, the TLT bond fund, maybe dividend-paying stocks. Bitcoin could turn out to be ambidextrous. By this, I mean it could go up in a bull market, a bull trend. It could also go up in a bear or recession under certain conditions. So Bitcoin may be a good bet in both a bull and bear portfolio. Okay, then of course cash. I'm holding cash for another 12 to 18 months, to cover obviously living costs. And cash gives you optionality to buy the dip. Back to our questions. Is now a good time to invest? As of June 2023, I'd say yes. There's more upside than downside. How do I hedge my portfolio if I'm wrong? You have gold, TLT, cash, and maybe even Bitcoin. Will we get a recession and cheaper prices in 2023? Yes, possibly, but only a small pullback. I think it will be bought as people realize that the Fed is not raising rates anymore and that they don't want to be left out of a future bull move. An important takeaway here is for investors to be contrarian. So what I mean by this is in January of this year, 70% of traders were calling for a big recession and were short on stocks. The problem is they'd already sold and there weren't many sellers left, so prices have rallied. So wait until sentiment becomes much more bullish, and that'll be the time you might want to think about taking profits or selling. So let's look at gold. You can see we're at about 2,000 US dollars as of May 2023. You can see the three circles are 3 times we've hit 2,000. So we're in the third test of that $2,000 all-time high. So with gold, that's unusual is that we could go higher in both a bull and bear case scenario. So if we have a recession, we could still have a flight to gold as a risk off. We could also have QE open up and money printing increase in more of a bull scenario, and gold prices could rise there. You can see after the great financial crisis in 2008, 2009, gold had a run from 2009 to 2011 where it went up from 850 US dollars to 1850. So quite significant jump. And then the question is, could we have something like that happen again? This is another defensive option for investors. This is the TLT 20-year US bond fund. You can see it sold off from 170 US dollars in August 2020. It's come a long way down. We're at about 100 USD as of May 2023. So the 20-year TLT bond fund will work inverse to the Fed rates. So if we get a recession and the Fed starts cutting rates, you will see the TLT price increase significantly. As bond rates go down, the price goes up, and vice versa. So bond prices respond inversely to the rates, and therefore, if we've hit a 5% maximum Fed rate for the foreseeable future, the TLT has probably bottomed here and will strengthen through a recession. So it is an option here. Back to Bitcoin, similar to gold, Bitcoin could perform well in both a bull scenario where there is a quantitative easing or a quantitative tightening scenario if Bitcoin is seen as a flight to safety. That's sort of undecided, but we did see when we had the bank collapses, we did see a move to Bitcoin. So the question is, can Bitcoin be ambidextrous? Can it increase during both positive bull runs as well as be something like gold and a risk-off trade as well? It seems we're getting closer to that being a reality. We don't know. But in either case, it is a fixed supply, known entity without counterparty risk. Recent bank failures have taught people that their money is not necessarily safe in legacy institutions. Okay, so getting close to the end of the video here, I've listed out some options for the biggest gainers, looking at 2024 and 2025. Granted, this is a fairly wide time frame. We're in the middle of 2023 in May, and looking out 12 to 24 months, let's say. But patient investors should always be thinking at least in these time frames. Looking out longer is always gives you sort of runway for your theses to play out. So here we're looking at gold, Tesla, Palantir, Bitcoin, and alternative crypto. I won't comment much about alternative crypto, but just say that there is big upside if we do get another crypto bull run, which is very, very likely. Bitcoin will run, but the alternative crypto like Ethereum and other smaller coins will likely run more proportionally. The question is which of the altcoins to choose. There's some risk there. So this is the Tesla chart. You can see 2022 we hit a peak of 400 US dollars. We then had a very large crash at the end of 2022 down to 100 US dollars. Very painful for investors to sit through that. But we've had a good bounce of almost 100%. We're at about 190 US dollars now. Tesla continues to grow exponentially, both in car sales and revenue. Their margins are strong. They're opening up factories in Mexico, Canada, looking at Indonesia. Each of these gigafactories is scheduled to produce millions of cars per year. So the bears saying that there's not much demand is a bit strange, because Musk would not be building so many gigafactories if he wasn't confident that the demand was there. So if you average about 2 million cars per year per gigafactory, and they're getting now 6, 7, 8, 9, 10 gigafactories planned out, you can see the numbers get them to, let's say, somewhere around 10 to 20 million cars per year. At that rate, Assuming their margins are steady, you're going to have an extremely profitable company and a much, much higher stock price. So a very good bet and something to look at. Most likely, the Tesla share price will rise before this exponential growth in sales is realized. So if you're thinking that car sales will be in the 10 to 20 million range per year by 2030, the run up in share price would be before that, perhaps closer to the 2025, 2026 range. Once the gigafactories start to scale, investors will anticipate that growth and front run the price. Palantir is a new addition to my portfolio. It's an AI big tech company that has just recently become profitable for the first time. It IPO'd in 2020. So October 2020, Palantir IPO'd at around $9 US. It spiked up to $44 US within by January 2021. It's since fallen. Of course, the company's gained revenue but was not profitable until the most recent quarter. We saw it bottomed into the $6 to $9 US range. It looks like from around May of 2022 up until early 2023, and we've just now had a breakout from that $6 to $9 US range into 12. I think we're at 13.50 as of this video. Palantir's customer base is up 41% year over year. They're now profitable, projected $500 million US profit in 2023. There's a large demand for AI powered solutions, and Palantir is still near their IPO level. So some predictions on the biggest gainers for the next 12 to 24 months into 2024 and 2025. Again, not financial advice, but looking at gold, we're currently standing at around $2,000 US. Realistically, we could get into the 2,300 to 2,800 US dollar price. That's a 15% to 40% upside. Tesla currently at 185 US dollars. Again, it would be reasonable to see it selling in the 270 US dollar to 500 US dollar range within 2 years. That's a 50% to 200% upside. We just looked at Palantir. We're very near the $9 IPO price, and most of the moves should be to the upside. They're now profitable. AI is booming, and they're a market leader there. So going to a range of 25 to 50 US dollars would see a 100% to 300% return. Bitcoin, I think, is a good buy at 26,000. We've gone through a complete nightmare in the crypto market with things like FTX and other products and exchanges blowing up, and Bitcoin has held up very well. The all-time high was 69,000 US, and so even looking at a very conservative new all-time high of another half X or 1X, we would see a Bitcoin price of somewhere between 80,000 and 150,000 US dollars. From the current price, that's an upside of 200 to 500%. And finally, with alternative crypto, I'm referring to Ethereum and other coins. Assuming we have another bull run in crypto, which is looking like it'll happen either later this year or early in 2024, these other coins will outperform Bitcoin proportionally. You could see 1,000 to 2,000% upside. The issue here is just, like I said before in the video, is which coins to choose, and there's risk if you get that wrong. It's important to remember that Tesla, Palantir, and Bitcoin crypto have all had very significant sell-offs in the last year of easily over 50%, and that's shaken out a lot of the weak hands. All of these have a strong fan base and investors that will stay with these assets long term. And so even if there is a little bit more of a pullback in any of these, I think it'll be bought, and over a 2-year period, you will be higher. Thanks everyone for listening. I hope you found the video useful. You can follow me on Twitter at Gresham's Law 7, or of course on this channel on YouTube, and I'll be releasing more videos soon. Thanks very much.